the Market Musings podcast. Well, hello and welcome to the Market Musings podcast here from Stopbox, where our guest today, Paul Welch, who is the newly appointed CEO of Nostra, Terra Oil and Gas, is joining us for the first time on the podcast. A pleasure to have you with us today, Paul. How are you?
I'm great. Thanks for the invitation. I'm really looking forward to it.
Yeah, I'm looking forward to it as well. And yes, Alan is, of course, here, the co-host on the podcast. All well with you, Alan?
Oh, well, thank you, Mark. Yes, lovely hot day here today. Just talking to Paul about the weather and the fact I have to go to London tomorrow and jump on the tube at the Victoria line, which will doubtless be like a sauna when I get there. But
that will not be pleasant, yes. That will not be pleasant. It's very warm also in the Netherlands, yes. And I'm also going to London on the weekend. So, yes, I might also experience if it's still holding there. Paul, while we're talking about the weather, where are you based and what's it like for you?
So actually, I'm in London at the moment. I can tell you it's hot. I was on the tube yesterday, and I can vouch for the fact that it was hot, and it will be hotter today. So yeah. Normally, though, I'm based in Dallas, but I'm in London this week.
Yeah,
so I get to experience I lived there for a long time in the past, and so normally the weather is quite not as nice. So I would say so. Even though it is warm, it's very pleasant. So I'm quite happy to be here this time of year versus another time when it's kind of a little bit colder and wetter, right?
Unpleasant. So, exactly. Yeah. Well, like I say, thank you so much for your time. It's good to see some changes at Nostra, Terra Oil and Gas and meet some new people. And of course, on the Market Musings podcast, what we like to do is talk about the people really and the people in the business, because really it's the people that make the business. I did a podcast with Rick Rule that's going out just in a few minutes, and he was talking. It's the people, it's the humans in the business really. Mining companies can also be seen as liabilities, until they're actually proven. But the people is where you want to be focusing your attention. Will they deliver? What they say they're going to deliver. Will they deliver some value for you? So, not to put you on the spot at all, Paul, but we can go back and make it easy to begin with. I know when we've spoken on an interview before, you do have a lot of history in the oil sector, having spent a fair bit of time in The Hague, where I live actually as well.
Yep.
But if we can perhaps go back as far as you like. You can go back to where you were born or where you grew up, or you want to start from sort of university graduations, that kind of thing. But take us back and give us a bit of a.
Well, we can go way back. So born in the U.S., up on the east coast of the U.S., just outside of Boston, right, and then. I'm one of these people whose parents moved around a lot. So my dad worked for IBM, which stands for I've been moved. So every 2 to 3 years we moved to a different part of the U.S. And then ultimately moved overseas. So I lived in 10 places before I graduated from high school.
Wow.
All of which were domestic. So and then when I graduated, then my parents moved overseas. So they spent, when I was in university, they spent their time in Asia. So I went. So I was born in Boston. I lived 10 places. I ended up going to high school in Miami, Florida, and then I went to university at the University of Texas in Austin, and then the Colorado School of Mines in Golden, Colorado. So I have a BS and an MS degrees in petroleum engineering, and then after that, I went to work for Shell for 12 years. And then after that, I went back and got an MBA from SMU in Dallas. And so that's where kind of how it started. When my first part of my career was spent, as I said, with Shell. So I started domestically in Bakersfield, California, working as a petroleum engineer. And then I moved to Houston for a couple of years. And then I went overseas and I lived in The Hague, and I lived in London, and I lived in, a number of other spots around the globe, because when you work for Shell, as you'll know, if you live in The Hague, everybody moves around again. So it was kind of repeating the process that my parents had started, where we moved every couple of years. And so I did that for 12 years. My last stint was I was manager of the Southern Cone gas in Latin America. Then I left, went back to Dallas, got my MBA. Then I went to work for Hunt Oil in their international group for a couple of years, and where we worked primarily at that point in Russia and and Ukraine. And then I went to work for Pioneer Natural Resources, where we started an international group focused on Tunisia, west coast of Africa, grew it from 500 barrels a day to 25,000, and then it was sold. And then after that company was sold, that portion of the company was sold, they focused domestically, they being Pioneer, and were immensely successful, as you know, and they were just taken up by Exxon. I unfortunately wasn't part of that. I went and became the CEO of Chariot, which was an AIM-listed company here in the UK. Ran that for a number of years, left, and then went and ran a company called Sea Dragon at the time. Then we merged it with another company called Madison Petrogas and formed SDX and ran that until 2019. And then stepped down in 2019 and ran a company called ACP, which is focused on Latin America. And then came onto the board of Nostra Terra kind of late in 2022, and then took over as the CEO in mid-May of this year. So that's kind of my chair. When I was with Shell, I worked all over the planet. So started domestically, and then worked everywhere. So Nigeria, Argentina, the Soviet Union, Indonesia, every place you can imagine. So it was a great experience. Happy to have. So I have a real strong technical background, and then from progressing through the ranks, a good management feel as well. So I feel pretty well rounded. And then having spent, I guess, 15 years as the CEO of an AIM listed companies. I have a lot of experience in that part of the business as well. So I feel I'm pretty well suited for the task ahead, which is to kind of turn this company around and make it something that we can all be proud of. So I'm really looking forward to the opportunity.
Brilliant.
Well, Paul, can I just say, what's your, of everything you've done, what has been if you could pick an ideal job? I know you're here as CEO now, but what's the thing that really floats your boat and that you enjoy most in your work?
So I mean, I think what I enjoy the most is turning stuff around. So in the case of Chariot and Sea Dragon / SDX, they were both not doing well when I came in, and we turned them around into some pretty incredible successes. So what I like is I like the challenge, and then as we discussed in kind of the pregame here, I like putting a team together and making it happen, working with the team, because you can never do it by yourself. You're only as good as the team that you surround yourself with. And, when you're successful as a team, it's a really enjoyable experience. You get to share it with people that have worked hard and had great ideas, and some of them don't work out. And when the ones that do work out, are successful, it's a really satisfying feeling. So that whole thing of, understanding the problem, quantifying it, thinking about the solution, and then implementing it and being successful, that journey that you go on, to me, is one of the most successful things or most enjoyable things you can do. And so that's what I like to do. And I think I have that opportunity here with NTOG. Probably some people would say I have probably bigger an opportunity than I would like to admit. But I think it's a really good opportunity and a great chance to do it again. So that's why I was interested when they offered it to me. So.
Okay,
thank you.
Good. Yeah, I think you do have a good opportunity. We spoke before that we'll get onto NTOG in a moment, but of course it is. It could do with a new lease of life, putting a team together. I know we'll talk about that in a moment. It's it is perhaps an unloved company at the moment, and the market cap is obviously pretty low as well. But before we get on to that exciting stuff, I mean, that was a great potted history there. I mean, I think you did that in about 4 minutes. You covered all of it. And that's, I think,
we don't want to bore everybody, So.
No, but that's the fastest I think anyone's ever gone through their career. And that was brilliant, because normally that section can take, 10, 15 minutes. I think that was fantastic. Okay. You did that in sort of 4 minutes there and really gave us an idea of what all that was. I mean, was it always oil and gas? You went to the Colorado School of Mines. Was it an interest in geology, or because your dad was IBM? So where did the interest in sort of geology or oil and gas come from?
It was always kind of engineering based. And so at the moment I'm involved in a mining business as well, but it's always really been focused on engineering, oil and gas. I did work myself. I put myself through school. My parents had moved overseas, so I worked for IBM myself for for about 4 years in a number of divisions in that company. Again, just being exposed to technology, it was a wonderful place to work, great people, and then they had access to kind of some of the best technology. So they had a petroleum engineering group that was based in Houston that we talked about going and doing some things with, but I was more involved in the engineering side and other parts of the business. So I started kind of in the computing world, and then that combined with the engineering led me to the petroleum. I think probably the best way to describe it is that I was originally going to be a doctor, pre-med, and I was studying. I was at the University of Texas, and I was doing well. I was really excited about it, and then I had a good GPA, but then I talked to my advisor, and he's like, "Okay, what are you going to do?" And I'm like, "Well, I want to go to med school." And he's like, "Well, med school is difficult to get into. You might want to think about, some other opportunities with your biology degree." And I'm like, "Oh, okay. Well, that wasn't really what I had in mind, but okay, I'll go think about it." And so I go back to my dorm room and I start looking around, and I start looking through, these things like what you can do with the biology degree, and none of them were particularly interesting. One was there was a job opportunity to count reindeer in the Aleutian Islands up in Alaska. And I'm like, I don't, that doesn't sound great. It doesn't really sound that interesting. And so, as I said, I grew up, I was in high school in Miami, and I went back to Miami. And for whatever reason at the time, the headquarters of ExxonMobil for Latin America were based in Miami, right? So my next door neighbor worked for Exxon, and I was at home and talking about school, and his daughter was the same age as mine, and we were talking, and what are you going to do? And I said, well, I'm thinking about this, but with the biology degree I can do other things. And he's like, really? Count reindeer in the Aleutian Islands? Is that something you want to do? And I'm like, no. And he's like, let me tell you something. And so he was in business development for Exxon in Latin America. And this guy was a raconteur like you could not believe. He'd have these stories of flying helicopters into the jungle and dropping these people off. And it was just amazing. So he's like, I felt like that. I don't know if you saw the movie The Graduate, where the guy says plastics, you need, the future is plastics. So he's like, the future is petroleum engineering, and this is what you should do. So I'm like, okay, that sounds interesting. So I was at UT already, went back, and I, looked into it, and I changed my major, and I'm so happy I did. So that was I kind of fell backwards into it from the start of a different kind of academic career, but I really like it. So I have to thank my neighbor in Miami for that. So
it's a funny thing, actually. I know quite a few people in the medical profession, doctors and so on, and a lot of them are frustrated geologists and engineers who actually wish they'd gone into the career path that you took up. It's a strange thing, and of course a lot of them are interested in investing into small cap companies as well. So there's a real crossover.
Yeah, that's interesting. Yeah, so that's how I kind of got into it. And like I said, one interesting thing is, the wealthiest guy in the world, Mr. Bezos. I guess he still is. I don't know if he is. He went to the same high school that I did. His dad worked for Exxon in Miami, and he worked as an engineer in their Latin American group. Worked on some gas projects in Venezuela. So when I was at Shell in London, he was there working and for Exxon, and we had a kind of a joint project. And it was just at the time that Amazon was kicking off, and so he was big into the oil and gas. He was actually good friends with my next door neighbor, and so for whatever reason, Jeff didn't go into the oil and gas business, but he did pretty well on his own. So.
Yeah, well, quite well. Yeah.
I didn't know him. He was 2 years younger than me. I didn't know him, but anyway, he did go to high school. So yeah.
Brilliant. Yeah. So then you changed your major. You went to the Colorado School of Mines, and then the first job was a petro engineer in California, like starting.
Yeah, my first job was a petroleum engineer in California for Shell in Bakersfield, and I worked there for 2 years, and then I transferred to Houston. So in Bakersfield, we worked all up and down the San Joaquin Valley, offshore, off the coast of California, up in the northern basin, the gas basin, and the Sacramento Basin. Did that for a couple of years. It was a time when the oil price was really low, and so and we were producing very heavy oil at the time. So, and it was required for you it required you to inject steam, to produce the oil efficiently because the viscosity of the oil was so high. And so at the time, I think for every barrel of oil that we produced, we lost like $2 a barrel. So it wasn't sustainable. And so I said, well, I think we need to, kind of go do something else. And so the company with Shell at the time was kind of scaling back those operations just because they weren't profitable. And so, so that's when I moved to Houston with the company and started to work, onshore domestic U.S., offshore Gulf of Mexico. I was there for about 4 years, and then I went over to The Hague to work for the group and started the international push at that point. But yeah, so I started originally in California, and it was people I don't think can appreciate that. At the time I was in California, I think it was the third largest producer of oil and gas in the U.S. behind Alaska and Texas. So it has a lot of production. You'd never know it today. I think today it's probably fifth largest producer in the U.S., but there's a lot of production in the San Joaquin Valley, and so it was a very big operation that Shell had going there at the time.
And was it field based that role?
No, I was in the office.
So it's office based. Okay.
Yeah, it was an office based thing. So during the summers when I was going to school, I worked on the rigs, worked as a pumper in the roustabout in the field. But when I got to Bakersfield, I was working in the office. So and the office was very close to the field, so there was a lot of to-ing and fro-ing with the field. But it was primarily office space. Yeah.
Yeah.
Sure. Okay.
Yeah.
So you've worked up that sort of that corporate ladder, really, haven't you? Quite well there, building up that.
Yeah, I definitely experience. Started at the entry level and then worked my way up. Yeah. So and learn things along the way. So it's it's one of those things where you're given responsibilities. I think you can handle it. So you progress to a certain point, and then at a certain point you think, okay, this is like with Shell in particular. The great thing about Shell is that it was wonderful. They had lots of really good people. They also had, a lot of money. And so they were willing to let you try things. So you could experiment with this, try something new, see if it works. Maybe it didn't. Okay. But they didn't really, hold you to account unless it was a spectacular failure. So you had the ability to kind of test things and try things out. Sure. And so it was a great place to learn. And like I said, your colleagues there, they do a really good job of recruiting people. So it was, it was a good place to learn and try new things. And then, once you get over to the group, then you're going to different countries and seeing all sorts of things that are completely, surprising to you. But it's, it was a great place to start.
I do want to cover that about different countries. But just before we get on to that, I know you told me something quite interesting about working in The Hague, and obviously that's where I live, and I think it's a great place to be. But the Shell offices are quite something, aren't they, in The Hague?
Yeah, they are. I mean, again, they've kind of changed and moved around since I was there. But the main office at the time was on Oostandlaan, which is, I'm not exactly sure what part of The Hague you're in. But the interesting thing about that is that they're all, as people will probably expect, interconnected with tunnels between the two. So some of those row houses you see along the tram line there are all just facades. So behind that facade, you have offices and they're not completely modernized. So you have staircases that go hither and thither. You have, at the time you had the bathrooms kind of tucked away in certain places. So it was kind of a neat place to work. And it was, not what you'd expect in like kind of the modern, energy and oil business. You being in this row house that's, gutted behind it is really kind of cool. And then, if you wanted to go to lunch, you, went down, walk through the tunnel up to the cafeteria. It was it was neat. I mean, obviously Shell has been in The Hague for quite a while, so they're very well established. And the interesting thing is that for whatever reason, those tunnels were connected to the South African embassy as well at the time. So I don't know what kind of historical significance that represents, but that was an interesting thing when I'm like, well, what's down this way? And they're like,
you don't want to know.
Okay, and they're like, it's the South African embassy. I'm like, oh, okay. So I think at the time there were just at certain points in time there were lots of protests for whatever reason, and so the if they were protesting one particular, people were protesting for whatever reason, you could go into one building and still get to your office through another. So I think that was kind of the purpose of the tunnels. But
Sure.
yeah, you'd have to ask Shell. They would know the answer to that. But it was very interesting in that sense. So, yeah.
Just to echo your point on freedom, a very old friend of mine. Well, in fact, we actually grew up together, racing small motorcycles around many years ago. But he was one of the head geologists for BP for many years. A guy called Mark Shan, and he also worked in Houston, also worked in Venezuela as well. But he always said to me about the freedom that he had really to go and try things. And now he lives in Costa Rica. He lives on a yacht, and he invests into oil projects. So yeah.
Okay. So he did pretty well. Yeah, I think BP and Shell were similar. I think BP, to perhaps even a larger extent, was much more decentralized at a certain point in time, and so you really could experiment there. Because working at Shell, you had partnerships with any number of companies, state owned and privately owned and publicly owned, and so you saw a lot of variation in how companies were run, and so your company was run in a certain way, and BP, Exxon, Chevron, Texaco at the time were run differently. And you could see, it was an interesting comparison about, these things worked well at Shell, but that didn't work well at Shell. Whereas, maybe something at Chevron worked a little bit better, than worked at Shell. So it was an interesting comparison. BP at the time was transitioning through one of their, when we really were close working with them, they were transitioning from, one of their scale down periods. And so, they cut a bunch of staff. And once they cut a bunch of staff at that time, they were understaffed. And so people had huge amounts of responsibility. We're really trying some innovative stuff to kind of fill that gap. And they did some really unique things, I thought, at the time. So but at that point, we're working on the North Sea. But yeah, so I think every company that kind of I encountered had its own unique kind of selling point, let's say. And BP is one that they definitely had a lot of freedom. I think at Shell we had a lot of freedom too, whereas other companies like Exxon in particular was a little more top down driven than some other places were. So, but everybody had their own way to succeed, and you can't knock Exxon. They've succeeded fantastically forever. So hats off to them.
Excellent. So hearing that background, it sets us up nicely, I think, to look at your role at Nostra Terra, and it's actually exciting that somebody with your background and varied experience has actually come to the role. So did you envisage when you joined that the role might become available, Paul, or was it just out of the blue?
It was out of the blue. Yeah, it was definitely out of the blue. No, I wasn't expecting it. I mean, so I came on board with the idea of, the company definitely had some challenges at the time, but it was like, okay, let's, come on the board. We can, let's discuss how we can progress things. And it just kind of progressed from there. I think the transition happened because we were just underperforming. At the time, we had some recent success, but then when the prices came off and some of our recently drilled wells started to come off their high production rates, we really had to focus on the bottom line and where we were generating cash from, and some of the ideas on how to grow the business were kind of directly in conflict with our ability to do that. So I think, as I discussed with Mark on the podcast, the original idea was to kind of grow the footprint of the company, so to expand by purchasing other assets in other parts of the other parts of the U.S. and then overseas to a certain point for a certain part of time, and that geographic, that's called expansion, provided some diversification, provided the ability to grow in different directions, which was all well and good, but unfortunately, the company, just didn't have the capital to do that at the time. And so we got to a certain point where we recognized that we couldn't, that expansion couldn't be funded kind of internally. And so, we needed to kind of change directions and kind of hunker down. And so that's when the decision was made to make a change. Right. So as I discussed with Mark, we still have assets in West Texas, South Texas, and East Texas. So Texas focused at the moment. but we're selling those off, right? So we're trying to hone down, which I'm sure we'll talk about in a minute, on our primary asset. So when I came on board, what we did was we looked at, where are we generating revenue? How much revenue are we generating? What are our operating costs? Where can we make the most from the capital that we have available to us? And so in doing that, we decided to monetize the assets in West Texas and in South Texas, and just focus on East Texas, which is our main field called Pine Mills. And so, that the original expansion plans, were there. They just kind of didn't work out. And then, the interesting thing, again, that I talked about with Mark, is that the field that we have in East Texas has been there since 1949. The average well in the field makes about 10 barrels a day. And 2 years ago, we drilled 2 wells in the field that each made over 120 barrels a day, right? So when the expansion to West Texas was going on, I mean, those wells were coming in, when they were successful at, 20, 30 barrels a day. So for the same price of a well in West Texas, we could drill a well in East Texas and it would come in at, 4 or 5x. It's not a difficult decision to kind of focus on that. So that's why the change occurred, right? It was we need to kind of cut costs, refocus on where we're making our revenue stream, and then try to grow it from there. And parts of the U.S. domestic business have not been invested in as heavily as you'd expect, because there was a lot of capital that had gone to unconventional development, so shale, that sort of thing. So conventional development in the U.S. Hasn't seen the kind of investment that it had seen in the past. So, from our perspective, there are opportunities out there because people have taken their focus elsewhere, particularly the Permian, which has been, immensely successful by, as I said, my previous company, Pioneer. But, in the conventional space, there's still a lot of opportunity. And, with low overhead and an existing platform to produce, it doesn't take much. A 20 barrel a day well is a very profitable piece of business for us. And so, the more that we can find of those type of things, the better for us. And as I said, in Pine Mills, there have been wells drilled in the 50s and 60s. There are, at the moment, we have 10 wells producing, and we have 10 wells that are idle. And as I discussed with Mark, just returning those wells to production, we can add another 80 barrels a day, and it doesn't really cost us any additional facilities. We can sell the oil. We have the pumpers on staff, so there's no increase in overhead. It's just almost straight down to the bottom line, once we get the wells up and running. So that was the opportunity we saw. And again, that expansion that took place, happened, it's been happening for a while, but since 2019, there really hasn't been a dedicated look at the Pine Mills field and kind of, what its needs are. It was primarily providing the cash to allow for that expansion, particularly when the prices were higher. And so now what we're doing is to say, okay, we have this opportunity. We're going to refocus on Pine Mills and see what it can deliver. And then any expansion would take place in and around that area, right? You have a field that was discovered in 1949, and then you drill a well in 2022 that comes in at original conditions, producing 120 barrels a day. That's exciting, right? That's really exciting. Those wells pay out, in 3 to 6 months. And so, that's the opportunity set. So, when we think about, can we turn this around? Is there potential? Yeah, there is. Because of things like that, you can drill a well within the field boundaries of something we already own and deliver something like that. So if you look on our website, we show you there's a third location in the area that we call the Falk area, that potentially there's another well there that could do the same. So we think it's a great opportunity for us to kind of turn the story around beginning there, right?
Okay, yeah, okay. And how does it work with oil production and wells? Is it that the sort of the production slows down over time in terms of what's coming up from the ground? And I also just wonder why this field hasn't been fully exploited yet, why it's still got potential for further exploitation.
Right. So, okay. So this field, this field is kind of unique in that it has. Well, it's unique. It's every field's unique, but this one in particular has. It's in the East Texas. So it's in a very prolific area. It has really good quality horizons that it can produce from and have been tested, and then it has 4 of them. Right. So there is not just one horizon you produce from. It literally has 4 different horizons, all of which are productive, all of which are good quality. So, over time, people have focused on one and not the other. They've completed one zone, haven't commingled it. So, and it's also quite a complex field. So you have, fault blocks, that are separated from the main part of the field. And up until 2018, there wasn't any really good quality 3D seismic available. And so once that seismic data was shot, and if you look back in the press releases in January, we formed a consortium to go look at that data. Once that was shot, then you could really accurately, image the field. And when you image the field, it's tough to show without a map, but all these faults that were there were still there because they were large. But, in the old days, you couldn't pinpoint exactly where that fault was. So when you drilled a well, you wanted to stay further away from that fault. And typically, the sands kind of come in and they're dipping off that fault. So the closer you get to the fault, the higher on the structure you can get. But in the old days, you couldn't. There was such a wide uncertainty band around where the fault was. You had to stay back off the fault. And so if you look on the map on the website, you can see that the fault wells were drilled right up next to the fault because it can be much more accurately mapped. And so as a result of that, there's going to be, let's call this attic oil, that we think we can produce along this fault line that is now much more better understood than it was in the past because we just have the data available. So it's kind of like it was foggy, it was unclear, and then with a 3D you can kind of like, I put on a pair of glasses and now I can really see, where we're producing from. And so that's really what happened in the Falk area, is that fault was pinpointed much better than it had been in the past. And we saw there was an area that was shown that, look, there's a reservoir section here that has been tested. Our partner at the time, Cypress, have to give them all the credit in the world, drilled those 2 wells, made it successful. But now that, let's say they've shown the way, we can then replicate that in the other parts of the field, because they just have a 180-acre slice of, 2,300 acre field that we have. So that's what, that's what we've been doing. That's where we think the bigger opportunity lies, in these undeveloped fault blocks that we think are in the field that have yet to be tapped.
Sure. So Paul, can I ask? So the joint venture with Cypress, that's obviously triggered the change. Is it? Is that responsible, would you say, for the change in strategy now?
I wouldn't say it was responsible for it. It kind of highlighted, I think, Cypress's work and the success they had in the Falk area, and our participation in it highlighted, the potential in the field that I don't think people thought existed until the Cypress drilled those wells. So, now it's evident, what they did, how they did it, and the tools they used to do it. So with the farm out that we took from with them and looking at the 3D, we can replicate that stuff. So we still have an agreement with them. So if we do drill another well, they have the opportunity to be our partner. They don't have to be. It's at their option. We think they will. They're a good partner. But it's that access to that 3D, their use of the 3D and showing, technically how it could work and demonstrating the concept. So it de-risked everything for us, right? So, do these fault blocks, are there splinters that isolate from the main field? The answer, yes. Are they charged? Yes. Do they still have good reservoir quality? Yes. Can they produce? Yes. So when all those things are now yes, your risk level has reduced substantially. And so that makes it a viable opportunity for anyone, but including ourselves, because we own it, that much more attractive than going and expanding into another part of the planet that we don't know as well. Okay. Also, because we have the facility available to us, like I say, we drill the well within a week to 10 days, we can turn that well on and start producing straight away. And so all the infrastructure is there, so we don't have to build a facility, hire a pumper, hire anybody, increase our overhead. It's all available to us. So those incremental barrels are really profitable for us because they drop almost straight to the bottom line, which is fantastic.
Sure.
Okay. Yeah. So it's the modern 3D seismic that's helped you see underneath the surface. And when you talk about horizons, these are like, if you like, sections. Let's just call it sections of reservoirs, and perhaps one has been. I think I did see a diagram on the website. Perhaps it's been tapped at the top, but yet there's further below, or a bit around it that
so
hasn't been.
You think about like series of beds that are parallel one another beneath. So they're all kind of dipping up into the fault. So typically you'll drill down, produce one, and then when that one's depleted, you produce another.
Right.
Sometimes the wells didn't go down far enough to test even the deeper ones. So, now that you can image those on seismic, you can see that, beneath, the three that we've already penetrated, there's another one that has potential. And so, you have the ability to, with a lot less uncertainty, go down and test these things. Whereas before, you had an idea, but, you couldn't really image it. Now that you can image it and then you have some offset locations that have tested it, you're much more confident in going out and finding it. Now, it doesn't mean there's going to be hundreds of these things. There's going to be, the field is so big. There have been a lot of wells drilled, but you do see areas of the field that clearly haven't had any wells. And then sometimes, way back when in the 50s and 60s, you drilled a well, the well came in, produced, 50 barrels a day, 40 barrels a day. The oil price was $2 a barrel. It's just, it wasn't worth producing, right? It's like, okay, we can go drill another, Woodbine, which is one of the producing horizons in East Texas. That's going to make 200-300 barrels a day, 600 barrels a day, right? And so this 40, 50 barrel a day thing is not interesting. So we're going to move on. Today, if you can find a 40, 50 barrel a day well, that's interesting. And sometimes, we can see a zone that had been, tested, not completed because it wasn't productive enough, but, using today's metric of, is this going to be a profitable piece of business for us? Yeah, it will work. So there's a lot of things in the field that we can do. And I think the final part of that is this area is under active water flood. So once you drill a well and start producing, you mentioned that these wells decline. They decline because there's not a lot of pressure support. So if you think about like a balloon, when you pop the balloon and you start letting the air out, the pressure inside that balloon decreases. It's the same thing in a reservoir. As you produce fluids, the reservoir pressure drops. And to prevent that from happening, you start to inject water, kind of down dip, and then you drive the oil up to your producing wells. In certain parts of the field, there hasn't been an adequate amount of, production versus, injection. So you've seen an imbalance. So parts of the field have dropped pressure. Other parts of the field have been overpressured. So the balancing of injection, with production is another way that we think we can find another probably 25 to 30 barrels a day of production that we can get out of the field just by better management of where we put water back into the field. The northern part of the field hasn't seen injection in adequate amounts for almost 2 years now. And so we've dropped something like 15 barrels a day up in the north. And so, again, it's those opportunities that aren't exciting. We're not drilling in, like in the case of SCX or Chariot, we're not drilling in a deep water offshore well for $100 million. We're spending, $40,000, putting water back in the ground, but it's going to make us 15 barrels a day. And so, those are the kind of things that get us excited because, we know they're going to be very profitable. And so those are the type of opportunities we see. It's not going to be drilling wildcat wells. It's going to be just what I would describe, in using the U.S. football analogy, of basic blocking and tackling. We're just going to do our homework, focus on what we know and do it well. And so that's kind of the plan. So it might be boring to some people, but it's definitely exciting to us. So,
but boring is also good, though, isn't it? I think.
Yeah.
Well, if it's profitable, it's boring.
Yeah, if it's profitable, yeah, exactly.
So I think that's the focus. Profitable and boring. Okay, we'll take it.
Right? Yeah. So Paul, I've got a question for you. When I've spoken to other companies that have operated in the area previously, and I've heard plenty of stories previously about privately owned wells being taken over and bought out, and there seems to be a lot of there seems to be a lot of private ownership in Texas as a whole. Is that something you're still seeing today, or do these wells now tend to be owned by larger corporate bodies? What's your take on it?
Yeah, I think it's just the opposite. They're mainly owned by smaller companies, both publicly and privately. But there's a lot of smaller privately owned wells, companies' wells in all parts of Texas, East Texas, West Texas, South Texas. I would say particularly in East Texas because, if you look at history, there's a large field called the East Texas field, and you had the ability way back when to drill a well on every 5 acres, right? So every 5 acres you could drill a well, and these wells came in, 300-400 barrels a day because you had this big wonk in sand. And so there's a lot of, let's call them family-run businesses in East Texas that have, done quite well. And so, the grandfather did well, the son has done well. Now the grandson or granddaughter's running it. They may not have the interest that the older generations have. So there's a lot of opportunities, to take, to buy those people out or to work with them and improve the production. So I'd say the majority of wells I would expect in East Texas are probably what you describe as privately owned, small, 5-10 barrel a day type things. But for a company of our size, if you can, assimilate a number of those, very profitable piece of business. So yes, so that's still true today, right?
So I know at the moment you're consolidating pine mills and focusing on the profitable wells, but presumably you get to a point where you've reinvested into those wells are producing at profitable levels. Would you then look again at perhaps expanding the operation? Obviously, you can't talk about stuff that isn't in the public domain, but you've obviously some ideas yourself on this.
In a general sense, yes. I think the expansion at the moment that we envision is expansion in the area. So, we have a facility, we have a staff, we have an operation there. So the more oil we can put through that, the more use we can make of that facility, the better return we can get from it. And so our expansion plans, when we have them, will be primarily, initially at least, focused on in and around that area. So, are there other, can we expand the pine mills, footprint beyond the current boundaries? Are there, is there offset production that we can pick up or wells that we can drill? The 3D acreage that we picked up, is something like 15 times the size of the Pine Mills field. It might even be more than that. So we're looking at that 3D across a broad area. And so there are going to be opportunities that come from that, we expect. But again, the expansion is going to be like, let's say, in our neighborhood. We're not going to, at the moment, we don't have any plans to move beyond that, right? We want to consolidate, develop, produce, and generate cash from, the asset that we have. That's job one. If an opportunity comes up, that's, better than what we see there, then we'll certainly take a look at it. But at the moment, we're really just going to focus on, as I said, the basic, boring blocking and tackling to make, what we have a success, because we think the potential's there. As I said initially, the field was discovered in 1949. It's produced about 33% of its original oil in place to date. There's at least another 17 to 20% we think we can get out from the existing well bores before the field will be depleted. So again, that's our target, and that the size of that target at the moment is about 6.5 to 7 million barrels. So that's what driving kind of the day one decisions is, really to capture the potential that we see in the existing field, because it's going to be the most profitable barrels that we can pull out almost anywhere, right? Because we have well bores there, we have a facility there, we have a staff there. So we just have to coax more barrels out of this field. And again, that's going to really generate revenue that we haven't seen in the past. And that's the objective.
Excellent.
Okay. Yeah. I have a few quick fire questions for you. Then I want to finish off on the overall strategy, but just go through some quick fire questions, see if you can answer them. Maybe they won't be quick answers, I don't know. But
I'll try to make it quick.
We talked about the company obviously has a bit of legacy debt, and you want to sort of get that sorted. And you've talked about sort of targeting you're getting wells back into production for maybe a $40,000 US spend. So debt and funding. What's the plan here? Oil price prediction, if you can, or where you think it might be heading, and then finally, if you can give an idea of what you would like to be targeting. You said 20 barrels a day is very profitable. So as a target for starter for 10, a sort of a target you'd be aiming for in the next 6 months to get to.
Okay, so we'll start with the last question first. So again, as
Sure.
we said, we've got 10 wells that we know are idle and sitting there and have the potential to return to production. So of those, we've drafted programs that have identified 9 that we think we can return profitably to production. So those 9 wells, again, assuming that everything works as planned, can generate essentially 83 to 87 barrels a day of new production, right? So that's on top of a field that's making at the moment about 75 barrels. So again, that's the original target, that's the first target, is to get those wells back on production and generating revenue. So that'll take our current production to almost double, and it'll take our current cash flow and more than double it. And so with that, we have $4 million of debt that we've inherited. The debt is stable. We got a great bank that's supporting us. Once we get that up and running, then we're going to start to pay that down. So ideally, we want to get that down to something more in line with, like, say, $1.5 to $2 million. So we see paying a big chunk of that off.
Okay.
And again, that we'd like to do that in the next year to 18 months. We really want to whittle that down. As far as oil prices go, again, this is the thing that sinks everybody when you try to think you're smarter than the market. So we have been running our scenarios at $75 a barrel, right? That's our baseline. We do a sensitivity down to 50, and we do a high case scenario at 85, right? Flat. We just run them all flat to see what we do. So we're focused on $75, and everything that our decisions at the moment are based on that. If you look at the forward curve, it's above that at the moment. Our current prices in the field are running about $82, so we're a little kind of ahead of our price forecast, but that's what we expect. There's a lot of things coming up, elections here in the UK, elections in the US, a lot of things that can change. But we think, between 75 and 80 is probably, where we are forecasting our kind of price to remain. If it's above that, great. If it's below that, we think we can survive. Our operating costs are low. We're running about, 11 to $12 a barrel.
Right.
In some areas of the field. In the Falk wells in particular, the operating costs are like, $3 to $4 a barrel. So we're in a very low price environment. The reservoirs that we produce from are very shallow. They're 4,000 to 5,000 feet, right? So 1,500 to 1,700 meters. So we're in a very low cost environment, and our oil gets about a WTI price less, $2 to $3. So we're in the right part of the cost curve. And so, we think at those prices, we have a very profitable business out into the future. So
great.
That's a long-winded answer to your question.
No, they were short. They were good. And now I want to go on to a final thought here. You joined in 2022, having seen the opportunity as we've talked about here. You do have previous experience as CEO of AIM, of course, serious experience with the likes of Shell. CEO of AIM is a very unique, very specific role that you're playing there, but you do have experience. But what caught my attention is something you said earlier. You said, you enjoy turning stuff around.
Yeah.
And that's what's caught my attention with NTOC. This is feeling like a big turnaround story here. And you said you enjoy turning stuff around and putting teams together. So my question really is, what do you want to achieve, and how will you do that? What people will you put in place? What actions will you do to turn this around to meet the achievement that you personally want to see from this company?
Yeah, so we've kind of already started on that journey. So what I wanted to do was to kind of first do a look through all the assets, what's worth keeping, what's not worth keeping, and so we've accomplished that. Made some changes at the board level to bring on some people who are kind of, and we haven't talked about this much, who are focused on the business that we have. That's Jim Newman that we just brought on board. Yep. Again, very domestically focused, been from the services side of the business, has worked with old well bores his entire career, knows how to milk the most from those in a profitable way. So we've put the team together, and so from that, I think we're on the journey. We've started the journey. What I'd like to do in the next 3 months is to get these idle wells back on production, right, and demonstrate to everyone that we're going to do something that we say we're going to do, and it's going to be profitable for the shareholder, right? We're going to show them we return these wells to production, our revenue stream is up regardless of what the oil price is. And, we're starting down the journey to make the turnaround, as you describe it, happen. And so it's really, watch this space. We want to really, focus on, and finish the sales process. So we'll get rid of the West Texas, South Texas assets, and then just focus on Pine Mills, returning those wells to production profitably, and then increasing, the throughput and the yield from the Pine Mills field. And then, the next step of that would be to, drill another Falk well, to have another success like we've seen that the Cypress guys have delivered, another 100 barrel a day type well in one of these fault blocks that we've uncovered from the 3D seismic. So I think those are the two real milestones to look forward to, is returning those original wells to production and then having a successful new addition to the portfolio from one of these fault blocks that we identify with the 3D, the technical work.
When might you want to drill?
That's a good question. I don't know. That I don't know. I really don't know.
Yeah.
And because we haven't finished the technical work, and also we have to find a partner, and we have to do that with our partner.
Okay.
So that's difficult to predict. So we're in June now. Could we do it by the end of the year? Maybe. I would say we'd like to do it within the next 12 months. But that one I won't be pinned down on a time.
Yeah, of course, yeah. But you've set up the stall for the next 3 months, bringing those idle wells back into production.
That's what we'd like
almost
to do.
proving.
Right. Starting that journey so we can see quarter on quarter improvement in production. That's really what we want to start showing to people. So that'll be your first indication that the turnaround has begun, is once we start to see this increase in production. So that's what I think people should be looking out for.
Sure.
Excellent.
Okay.
Well, thank you so much. And I know you mentioned Jim. We will do a musings with Jim as well. It'd be nice to get his perspective on things. I know he's a big shareholder. But Alan, do you want the final word?
Yeah, just a quick final question. Again, just to pick up on what you said earlier, Paul, about surrounding yourself with a team of people. So it's a win-win for the entire team. Do you anticipate bringing anyone else onto the board? Is there anyone else that you want to bring in to complete that team, or is that team in place already?
We'll probably bring more people onto the team, but they're not going to be onto the board. I don't see any additions to the board in the near term. We brought Jim on. Jim's in the process of getting approved, so he'll come on, I think, probably Thursday this week officially. But I think for the moment, for the near term, that the board additions to the board, I don't see happening. On the technical level, there's a team there that's been working. We'll probably supplement that with a few other individuals. They may be contract, they may be staff, I don't know. But as far as the overall board level, I don't see that. I don't see any additions to that in the near term. No.
Yep. Okay. Thank you.
Okay. Well, thank you so much, Paul. Thank you very much for your time today. Paul Welch is CEO of Nostra Terra Oil and Gas. I'm looking forward to following those milestones. I will be holding you to account on some of the things you said today. I'm looking forward to it, though, and also talking to Jim as well. But thank you very much, Paul.
All right. I appreciate it. I really enjoyed it. Thanks so much for your time. Love the questions.
Paul. Thank you.